7.3 is talking about disposing of plant assets. We have one learning objective. You need to be able to journalize the disposal of plant assets. So discarding a plant asset that has no book value. So here they're showing us our plant asset record sheet, and then they're also showing us our general journal. All right, oops, sorry. On January 4th, it says that we discarded a notebook computer. Original cost was $12.45. Total accumulated depreciation through December 31st was $12.45, memorandum number 4. So first thing that we're going to do is journalize the disposal. Here we're going to put in our accumulated depreciation of office equipment for $12.45, and then we're going to credit office equipment for $12.45. Okay, we also need to put this onto our plant asset record sheet. Remember that second section, that middle section is for when we dispose of our plant asset. So here it's saying that we're just discarding it. Here it says discarded. So it's like we're throwing away. We're putting the date that we got rid of it, and then we're also putting the disposal amount, which was simply 0. Okay, now we're going to look at discarding a plant asset that has a book value. So that example that we just looked at, it didn't have a plant, or it didn't have a book value. So first thing that we need to do is we need to journalize our partial year's depreciation. So if we look at year 4, we need to figure out when we're selling it and how much depreciation it's worth. So it looks at April 28th. So that means that we're going to depreciate January through April. So January, February, March, April, 4 months of depreciation. So if we figured out, let's see, our annual depreciation was 120 divided by 12 for months, $10 a month. We depreciated for 4 months that we owned it for that last year. So that's how they got that $40 for that last year. So we're going to debit our depreciation expense, and we're going to credit accumulated depreciation. Okay, so we'll record that partial year's depreciation. Then when we look here on our plant asset record sheet, we discarded it on April 28th for 0 was the disposal amount. Okay, let's look at this. I should have put this up first. So on April 28th, it says that we discarded an office table. It was originally $700. The total depreciation was $360. Additional depreciation needs to be recorded through April 28th. So that's what we did here, that first transaction. Okay, so then what we need to do is we need to record the actual disposal in the general journal. So first we're going to put in our accumulated depreciation, which was $400. We figured out to be $400. And then the way that I do it to figure out the loss or the gain is I also look at what we need to put in for our office equipment. So we're going to credit office equipment for the cost, which was $700. Now that tells us our debits and credits don't equal. If we were to get rid of this $300 right now, we would have a $400 debit and a $700 credit. That tells us that we need to have another $300 debit. That would be a loss on plant assets. So when we think of it, our ending book value ended up being $300, and we got rid of it for $0. So that means that we lost $300. Selling a plant asset. When a plant asset is sold, a journal entry is recorded to remove the original cost of the plant asset and its related accumulated depreciation. We also need to recognize the cash that we received. And then the last thing is we need to recognize a gain or a loss on the disposal of the plant asset if we have it. So here they're showing us on January 3rd, we received cash from the sale of a packing machine, $13,400. The original cost was $2,600. Total accumulated depreciation through December 31st was $12,000, receipt number 2. So here we have our plant asset record sheet. Here we want to record into our cash receipt showing that we received cash. We want to get rid of that warehouse equipment. And then we need to recognize our gain or loss. Okay, so when we look at this, we look at our ending book value was $14,000. Then we got rid of it for $13,400. So that right there tells us that we're going to be losing money on it. Okay? So first thing that we're going to do is we're going to debit our accumulated depreciation. which was $12,000. We also know that we're going to have a loss. So if we subtracted our ending book value and what we disposed for it, that tells us we have a loss of $600. We would debit that loss. We also need to get rid of that asset in our warehouse equipment. So I'm going to credit warehouse equipment for the cost, the original cost, which was $26,000. And then the last thing is we also have, or not the last thing, but we have a cash debit. We received $13,400. So that's what we'll put in as our cash debit. Now, we have a lot of numbers in that one transaction. So it's very important that you make sure that your debits equal credits here. Here they just show you how they figured out that gain or that loss on that sale. Okay, now we might trade a plant asset. So when an old plant asset is going to be traded for a new plant asset, the journal entry, one, we need to remove the original cost of the old plant asset and its related accumulated depreciation. Two, we need to recognize the cash paid. And then three, we need to record the new plant asset at its original cost. So it shows us on December 20th, year 5, we paid cash $8,995 plus an old forklift for a new forklift. Original cost of old forklift was $12,950. Total accumulated depreciation through December 20th was $6,000. Check number 848. So they don't actually show us our journal entry for it. Here is what we're going to do. We're going to have our warehouse equipment. We have our trade-in value of that $12,950. And then we have accumulated depreciation. It shows that we had $6,000. And then we also paid cash for that, so $8,950. Okay, the last thing that they're showing us is selling land and buildings. So on January 5th, Fidelity Company sold land with a building for $97,000 cash. The original cost of land was $25,000. The original cost of the building was $140,000. Improvements to prepare the building for sale was $10,000. Total accumulated depreciation on the building through December 31st was $85,000. So sometimes that might happen where we'll put more money into something just so that we can sell it. And so here what we need to do is we're getting rid of that accumulated depreciation. So we're going to debit accumulated depreciation for $85,000. We also need to get rid of that building and land asset. So we're going to credit those two for the original costs of those. And then here they're showing us how they figured out that we have a gain. Okay, so they're showing us the original costs, the improvements minus the accumulated depreciation, and then how much we sold it for to show that we got a gain on that sale of $7,000. And then we also have to record our cash. We received $97,000 in cash, so that goes into our cash debit. And then they recorded it on that plant asset record sheet. Okay, number 1, what is recorded on a plant asset record for a plant asset that has been discarded? On the plant asset record sheet needs to be the day that we discarded it, the type, and the amount of the disposal. So when they say type, they mean how did we dispose of it. Number 2, when an asset is disposed of after the beginning of the fiscal year, what entry may need to be recorded before an entry is made for a discarded plant asset? So we may need to record depreciation for that partial year. So depreciation expense would be debited and accumulated depreciation would be credited to bring the accounts up to date before we actually dispose of that plant asset. Number 3, what is the formula to compute the gain or the loss on the sale of the plant asset? To do that, we would take the cash that we received minus the book value of the asset that was sold. And then last one, number 4, when cash is paid and old store equipment is traded for new store equipment, what is the formula for calculating the new equipment's original cost? We would take cash plus the book value of the store equipment traded, and that would equal the book value of the new store equipment. That was the end of 7.3 lecture. You can now go on to your 7.3 work together.